All right. Awesome. Well, I think we can get going, and then as people join into the party, they'll hop in. But again, guys, thank you everyone for joining. Welcome to Advisor Stack's first webinar, hosted by yours truly, Nico DeMeo, and the topic is going to be presented with Zephyr, and the conversation is the power of research and analytics and winning clients and growing AUM. I wanted to first and foremost give a thank you to everyone. Again, this is our first webinar hosted. I can't thank everyone on the Advisor Stack internal team and all of our business vendor partners for all the support over the last couple of months to be able to get this product launched and situated, and really happy to illustrate everything that we've been able to do thus far with Zephyr at this point. So for today's agenda, move on to the next one, Nicole. So for today's agenda, we're going to give you a quick brief on our speakers. We'll show you guys the benefits of the proposal tool and how it's going to help you guys win over prospective clients and improve your relationship with your current clients. We're going to give you a couple of role play scenarios to illustrate how I was doing it as a previous financial advisor at Charles Schwab and TD Ameritrade, utilizing their tools, creating my own processes, and how the Zephyr platform can assist us in all of these operational inefficiencies. We'll have a Q&A and then the contact us. So first, just a slight introduction on myself. Again, my name is Nico DeMeo. I am the president and partner of Advisor Stack and head of relationship management with our company. And the primary focus that I really want to push on everyone is you, the advisor. We built this company for advisors, by advisors, to truly understand how can we make how we can make your business better, up and down from the top. And with that being said, I have Randy Jones from Zephyr, actually. Randy, thanks a ton for joining us today, and I really appreciate it.
Thank you, Nico. We at Zephyr are very excited to be, partnering with Advisor Stack. My name is Randy Jones. I'm the director of product management at Zephyr. I've spent the last 22 years working and building out investment management technology solutions for investment professionals. I've been with Informa, Zephyr, a Connect Informa company now for 4 years, building out our new web platform that we will be providing to Advisor Stack. It is an end-to-end workflow from data to onboarding all the way through performance reporting. We have won awards. We won a very nice award last year for our research and data. So we're looking forward to bringing that type of technology, efficiency, and ease of use to the Advisor Stack client base.
Awesome. Thank you for all of that, Randy. And with that being said, I wanted to really highlight basically what Zephyr is able to provide us on top of that. So if we go to the next slide, Nicole. So on Advisor Stack, we really honed in on, we call it the 5 pillars of running running an RIA as a breakaway advisor or as an OSJ. You have your billing and reporting arm, your trade order management arm, your financial planning, your research and analytics, and your CRM. Zephyr tackles the whole research, risk, and analytics portion of our entire business proposition. So some of the tools that they are utilizing currently are a proposal generation tool. We have access to all of the PSN and Morningstar data to be able to really do enhanced due diligence on any institutional managers or any funds that you want to be able to dig into. We have the ability to upload your own custom investment management agreement or use our out-of-the-blocks Zephyr proposal system. Zephyr risk management system. Those will all separate as risk buckets. 0 to 20 is conservative, 20 to 40 is moderate, depending on how you want to fit your client and your investment management agreement is set up. We can mold our system to do exactly all of that. On top of that, you have performance and model composite reporting, and you have financial planning and portfolio construction tools, including MPT, attribution analysis, and really understand what is the risk associated with this portfolio and what is my reward with that. Like Randy was saying, you guys have won multiple awards on this. I know you guys don't have many relationships in the turnkey space right now, but this is going to be the forefront of Zephyr, and where Advisor Stack comes into play is if you build a model on the Adhesion platform or Black Diamond platform, you now are going to be able to repeat that exact scenario onto the Zephyr platform and be able to really dig into all of that additional due diligence that may not have been presented at the custodian or through your normal research and risk analytics platform. So with that being said, I want to pass it to Randy just so you understand the difference of the proposal tool. And Randy, I'm assuming I'm going to have a couple of questions back and forth on this. So why don't we just start with the top lens, performance, and we'll keep going down this just so that everyone understands all of this.
Sure. So Advisor Stack and Zephyr, our client base, the top of mind are growing AUM and retaining clients. At Zephyr, our key is to help our clients service their clients better. It's all about our clients being able to show value add. So when we look at the 6 lenses that we use throughout all our research proposals, we really want to raise the bar in how we can demonstrate value add for our clients. We start with performance. So historically, performance has always been the starting point. Our clients have investment goals, retirement goals, many different financial goals. Performance has always been the first lens, bar none, forever in the investment management and portfolio construction area. So
I think
that
it's probably safe to say that everyone cares about, the bottom line. How good is my portfolio doing, correct?
At the end of the day, that's it. Now, when we get further down, that has been, we're seeing more of a generational trend where performance is slightly losing some of that, but for the most part, yes, it all begins with performance. Within these 6 lenses, we have sort of sub lenses, so we can really decompose each of these. So we provide many ways to analyze performance, but at the end of the day, yes, performance has been the top of the mind, and that's where we start.
Always the benchmark, right? So let me understand this, Randy. Are we able to do detailed sleeve level performance on a client account, or if they have a slub account for an SMA per se? Just curious how that would work within your guys' platform.
We can analyze at the portfolio level, at an asset class level, or at a holdings level.
Awesome.
So in that sense, we get further down, we talk about DNA, we certainly want to understand the constituents in a portfolio, but it really is important to understand the portfolio as a whole. But yes, we can decompose and look at these through these lenses at multiple levels of a portfolio.
Got it. So just depending on the client, if it's a more of a high level view, or if we need to get into level 2, level 3 analysis for performance or actually sub asset classes, we can all be accomplished on this platform. So that's great to hear. What about risk on your guys' side?
Risk is in the forefront currently. So risk mitigation, the 2 variables that have always, the top 2 lenses, we'll call them lenses, historically with performance has been mitigating risk and constructing portfolios that mitigate risk. As of, because of the volatility and the market turmoil in 2022, we're seeing a much bigger focus on risk. And again, as we, depending on how you would like to analyze the risk, we have multiple risk lenses, but certainly capital preservation, top of mind currently, and we have ways to evaluate capital preservation. Volatility. So it all depends. Exposure, as we'll see in DNA. So there are a number of lenses depending on how our clients want to display or engage with their clients around risk. It could be less sophisticated or very sophisticated.
So I see on slide number 12, I know that this presentation just has a wide array of, again, all the lenses on that, but slide number 12 looks like it's showing historical drawdown on this. Is that sort of the benefit of what risk is also kind of supplementing for this, is to show you this is how this portfolio would behave during these periods of turmoil, et cetera, or what else are you guys doing with that?
Most of our clients, it took drawdown a while to get to the wealth management space. It's been used in the institutional world forever, but that's capital preservation. So we can actually see over different market cycles how in this case, this is a proposal, so we want to see compare maybe your prospect's current portfolio with your proposed portfolio. Again, we're trying to demonstrate your value add with this storytelling process. But the underwater drawdown chart is one of the most popular currently because that's money lost. And if you want to have a view into capital preservation, on that slide, there are individual statistics as well. One of them is the pain ratio. That's a Zephyr specific metric that we created based on the drawdown numbers. So it's a proprietary statistic to Zephyr, but again, it's a good measure when you're comparing portfolios, comparing managers, and it really has a focus on capital preservation, which as of right now is pretty important to our clients.
Gotta love periods of turmoil and volatility, especially with the interest rate market right now. So it kind of speaks right into, what is taught, what is at the forefront of the end client's mind, and how can we really mold and create a proposal that is custom built for specifically where they're at in their process. So that's really interesting in how you guys did that. What about peer and style? Now, I'm sure we're getting into a little bit more of the complex side of things, but tell me a little bit about this.
Well, this is now raising the bar in that there are many options out there for our clients, or even for our clients to analyze. We want to be able to analyze and compare how our portfolios stack up relative to our peers. So that's another great lens, and we can do this also at the holdings level, at the subclass level, at the portfolio level. But we do want to be able to dig deeper and compare and provide another lens for the value that we're adding to our client's client portfolio. And peer analysis is a great way to do that. Style analysis has been around for quite a while, and it has two main components that relate to how our clients use Zephyr. One is to, as we bring clients on board, our clients bring clients on board, we will do ongoing monitoring. If you hire a manager for a specific strategy, we want to make sure they stick to that strategy. Style analysis gives us a lens to view whether a manager has stated their stated objectives, or do they start making changes to their portfolio and strategy based on where the markets are going. The other side.
Got it. So would you say that this is kind of a way for you to perform enhanced due diligence on an institutional money manager, so that if they do see any standard deviation based off of this kind of tells the story of what their actual peer style is at all of this point?
Absolutely. It's part of the storytelling process, and it could refute what the manager's telling our clients based on, so a lot of this analysis gives you a red pen to sit down and kind of analyze. But this, again, in the proposal context, the other side of style, as we'll see in one of our scenarios later, if we have an aggressive investor, for example, that will be more kind of geared towards small cap, we can use the style to build portfolios with a tilt to small cap. So one is the use of style for really measuring whether a manager adheres to their stated objectives. The other is to help construct portfolios that will drive to a tilt that may be, a requirement for your client to achieve their goals.
Amazing.
So there's kind of two-pronged.
You get the best of both worlds, kind of a way for you to really look at your actual style on that. And then if you wanted to perform enhanced due diligence, this is kind of a way for you to really ensure, hey, this manager tells me this story. Let's back test this and actually see if this stays true. That's a really invaluable experience for all of that.
And just real quick, those two, when we think about the research that we can provide, and we focus on proposal, but the award that we won, it really is being able to do that type of due diligence and the research that Zephyr provides, apart from all the other parts of the workflow that you had on an earlier slide.
Yeah. Perfect segue into the last part of DNA analysis and part of my personal favorite, ESG. I know you guys are taking a huge step in the industry to really be the forerunner of this type of style. So why don't we talk about the analysis and what you guys did from an ESG stance?
These two in particular, we're an outside-in company in that our product team spends lots of time speaking with prospects and more importantly, our existing clients. And what we found in the last couple of years is really to understand better at the portfolio level. So DNA is just that. It's the DNA of a full portfolio, where if we have multiple equity products, we want to know what sectors we're exposed to. We'd like to know what characteristics, dividend yields, things that across the entire portfolio, give us a picture of what we're exposed to. On the fixed income side, what does our maturity look like? What does our quality look like? What does our duration look like? So it provides a DNA lens. Then we look at exposure to regions and countries. When you look at, the turmoil around the world, what areas are you exposed to? Is that acceptable? Would you like to make a change? So the DNA really provides the look through at the portfolio level, which is, all the analysis we can do at the constituent level or the holdings level. This really brings a focus and a lens on the entire portfolio.
I see where you got the name DNA, the genome of the actual portfolio, and the look through of the entire situation. Great name on all of that.
Yeah,
yeah,
it
it makes
resonates.
sense. And then lastly, ESG. Like I said, I know you guys are making some headwind in that and being a forerunner. So what are you guys kind of, taking steps in that for?
As your experience is, and many of the clients' experience, this one has been a hot topic for a number of years. There's been a lot of, I guess, differing, opinions on it, but based on our client request for the need, we have very in-depth environmental, social, and governance analysis. We can analyze that on mutual funds, ETFs, SMAs, equities. So we cover the different vehicle types, but it really, if it's important to not only your portfolio to demonstrate that the constituents in the portfolio adhere, or score high or show characteristics to environment, social, or governance. We can provide that in the report and a lens to view that. We can also construct portfolios. If you have a client that, again, has more of a tilt that's focused on the environment or pollution, for example, we can build construct portfolios that have a tilt to managers that provide that goal of adhering to better pollution. And we have a number of these, what we call key performance indicators across ES and G. And again, that rolls up into the DNA, where not only can we view this at the holdings level, we really want to see it at the portfolio level so that we can make changes if your client's client requires certain ESG.
Amazing.
So, yeah.
Amazing. So the way that I can kind of see all of this and, just what from a high level stance is based on the specific type of client that I am discussing or talking to, I can pick and choose all of these types of lenses that may be applicable for them, customize the layout, customize the feel, color scheme, your logo, and basically give them that report that's sort of customized and molded specifically for that end client at that point, correct?
Yes, that's the one differentiator with Zephyr. It's, being in product, it's what we receive the most information on is really telling the story, demonstrating your value add. That could be a one-page piece, it could be 50 pages, it could be one lens, it could be 6 lenses, but we want to provide the tools for our clients to go as deep as they can or want to in demonstrating their value add. So yes, the our ability to tailor make customized reports is something that we're proud of, something we do make a lot of enhancements to, and we receive a lot of feedback from our clients on. Again, this is all about helping our clients grow their assets. So the proposal itself is how to win business. And then ongoing monitoring once that client comes on board is paramount. So then we have all the lenses to continue demonstrating that our portfolio is still achieving the goals that our clients are looking for.
Amazing. Part of the other value proposition that Advisor Stack will do, again, for all of the Zephyr clients here that are utilizing the Zephyr platform through Advisor Stack is we will help custom build this for you guys. So if you have a previous report template that your clients are used to seeing, give that to us. We'll build that for you and get it as close as possible to it. We'll show you, we'll train you, we'll give you the easy buttons to being able to click this. And then the biggest capability is going to be our batch reporting ability. You can set up a cadence per se of having a quarterly performance report or a quarterly DNA analysis set for a client each and every month, quarter, year, whatever it may be. We will then take in that batch report and securely upload it into their client document storage system, which is ran through our Advisor Stack relationship as well. So a couple of different ways to really give the power to the end client and give you the power as the advisor to pick and mold specifically what they're looking for in that instance. So awesome. Thanks for that, Randy. With that being said, I wanted to get into a little bit of a demo scenario and to kind of illustrate, what I was doing as a financial advisor at TD Ameritrade and Charles Schwab up in San Francisco and Cupertino, as opposed to what I would be able to do now. So step one is a 80-year-old widow. She's going to be ESG conscious. She cares about her grandkids and the future that they have. And she really values the relationship with the investor. Very high level, very touchy feel, very molded to specifically them. And servicing is going to be a very important piece. Dealt with this type of client all the time whenever I was in the Bay Area. And flip side, the more complicated, complex client is going to be Jesse Wright, the savvy 35-year-old tech investor who may have a large amount of restricted stocks options, who's very analytical. He's aggressive, believer in MPT, and clearly understands what a risk-reward attribution analysis is. So just to take you guys back into a little bit of my sphere whenever I was a financial advisor at TD and Charles Schwab, is we would then have to complement all of this information, cobble it together within our financial planning system and some of our back end systems to basically create a model portfolio driven from Excel. And then I would basically have to cobble all those together into one slam pat PDF. That took me hours on hours sometimes to get ready for a client. Randy, I'm going to pass it back to you to sort of see how would I use Zephyr in this instance to really win over these types of clients, and what can your proposal tool not only do from a householding and risk situation, but really expand on all of these capabilities per se?
Okay, well, let's look at the scenarios and look at from a proposal perspective. Let me turn this off just so I don't have a conflict with the, and then let me know when you can see my monitor.
Yeah. Got it right now. Perfect.
All right, so we'll focus the screenshot we had up there with the proposal itself. This is the Zephyr platform. We're going to focus on one key component. Again, this Zephyr is an end-to-end workflow, starting with data through onboarding, research, for asset allocation, all the way through to performance reporting. But what we'd like to focus on that will be, very instrumental to the workflow for the Advisor Stack clients is the portfolio proposal. This is a household proposal. What I've set up here are two households. We have the Smith household that has John Smith and Alice Smith, so our 80-year-old widow. Then we have Jesse Wright that has a portfolio of his own that will be more aggressive. So we want to be able to import, upload the household. Now, it could be just one account. In this case, most of our clients will be at the household level, so there could be multiple accounts or just a single account, as we have here. But the first step is we want to get this data into the system quickly at the household level. We also want to be able to upload the holdings. So again, the concept here is that we'll be comparing this prospect's current portfolio with our proposed portfolio, and throughout the process demonstrate the value that we're bringing to the portfolio. So once we can bring in both the holdings for any of the members of the household, in this case, Alice Smith and John Smith. A key component here is the risk assessment, in that we have a standard questionnaire. It's a risk questionnaire. This can be customized, and our clients will customize these. So if you have a set of questions that will include ESG, as well as time frame and risk, volatility, all of these types of things that are included in a risk questionnaire. There are currently many more behavioral investing type questions that are coming into play that we're seeing. So a key here, and in this case, I've used our base questionnaire, but we can upload a custom questionnaire and custom scoring so that our clients can really, across their client base, address the actual needs of their clients.
And yeah, I was gonna say, Randy, two things just to add to this too, just so that we're all on the same page. From the managed accounts and risk profile stance, part of the advisor stack proposition is we are going to basically be pre-filling all of that account level and holding information for you guys. So whenever you have which accounts come in, their holdings, their weighting allocations, all of that, we're going to kind of basically pre-fill that information with as much as you can. Like Randy said, you guys are going to have the tool to be able to do everything. We'll train you on how to do this. We're trying to get you as much time back to your day as humanly possible. Apologies on that, Randy. Continue.
Oh, no. But then, the result of this process is a risk score. And we have the ability to map to model portfolios. So these model portfolios or could be created easily in Zephyr, which many of our clients do. We could be able to import, model portfolios, but essentially, and then map them so that if our clients score a certain way and their assessment comes out as a certain score based on your scoring logic, we can map that to a model. So again, this questionnaire is going to be answered much differently between Alice and Jesse, the older investor and the younger investor, but the questionnaire can be customized for that. Then we want to be able to quickly analyze the current portfolio holdings relative to our proposed. So my model will load on the right-hand side. We'll know where we want to add potential capital, where we want to take capital away from. So we want to make it very easy to compare the current versus proposed in this process. Same thing for the Jesse Wright portfolio, where we go into the managed accounts. We've brought in their data, or this particular person's data, their holdings, their weights. Again, we can use the risk profile. Now we have a score of 76, different type of profile. We can look at the, proposed versus the current. This is now mapped to our aggressive portfolio. So again, this will be up to our client to determine, what they'd like to map and what the models are, constructed with. And then really at the end of the day, we want to create the proposal. And again, this could be a one-page proposal. It could be multiple pages. So it all depends on the sophistication or the number of lenses that you'd like to include in that proposal. So we we did make this as a, like we said earlier, tailor-made and customized as possible. Again, just so we don't have to go through all of the process, this is the actual proposal. So this one is a 31 pager. So this would be more for, the younger investor in this case, where I'm looking at the aggressive portfolio. All of these pages can be either included or excluded. The parameters on the page, the content on the page. So again, the magnitude of what we can customize is pretty high. And we spend a lot of time doing that based on feedback. But we want to be able to tell the story, the current portfolio versus the proposed. We want to have an idea of where we would be, trading assets away, bringing assets in. Again, these pages could be excluded. Then we move into a performance lens. And again, we have multiple performance lenses underneath of that, but certainly we want to be able to demonstrate, over calendar years, trailing periods. All of this can be customized. The growth, in this case of $1 million, so our clients can enter any values. But again, it's really to give us a picture of a current versus proposed through a performance lens. Then we look at the risk lens and underwater drawdown, sort of the number one chart being used currently, because this is capital preservation analysis and understanding how much money our portfolio would lose over certain market cycles. We can go back further. And then the pain ratio, again, is our proprietary ratio, where the higher the number, the better, as another comparative value, but that is a capital preservation metric. This is somewhat, in the risk return spectrum that Nico mentioned earlier, that is still, when we're constructing portfolio, there's always a trade-off between performance and risk. This gives us an idea of where we stand, but this is an aggressive portfolio compared to where this younger person is now. It's even going to get more aggressive. Then we go into the peer lens. Again, we can look at portfolios of similar construction and, look at quartiles from the 5th to the 95th, demonstrating that we're above, or at least in the top quartile on numerous metrics. So again, it's, presenting the value that you're adding by making these changes to the portfolio. We move into the ES, or environmental social governance. Again, we want to build a portfolio of ESG enhancement. So again, with our 80-year-old widow, we may only focus on just the ESG, for example. But we do want to see, that what we're providing and proposing is adding value from lens number, this also another lens. So we can paint that picture. We have scorecards on the ESG analysis of the current versus proposed. We have historical. So trends are something that, a point in time is good, but has somebody, done something over time consistently, and have they been consistently better than something else? So we have trend analysis on as well. Then we move into the DNA, which is the portfolio level. Again, really understanding exposure, sectors, asset class, regions, characteristics, move into fixed income. Again, when we're looking at maturity, quality, all of these characteristics that play heavily into decisions at the portfolio level. Then, top 10 holdings, understanding what, we're investing in, at least the top 10. And then we want to know the top 10 countries. In this case, it's heavily weighted, to United States. But, again, with all of the world turmoil, we want to have a lens that we can analyze at the portfolio level for regions and countries. And then we just display that graphically. So this is a storytelling report. Again, it could be 1 page, it could be 100 pages, depending on the level of sophistication and detail that your client or prospect would like to go through.
Amazing. And just to add a couple more things to it, the color scheme and logo for everyone can be fully customized to be specifically your guys' firm logo and color scheme. All of that will be seen in the bottom left-hand corner, and that is just a simple drag and upload. And on top of that, too, again, if you would like to add any additional market commentary, fact sheets on institutional managers, whatever it may be, all of those pages can be custom built and added ad hoc-ish into a standardized report template for you. So awesome. Thanks for sharing all of that with us, Randy. With that being said, I wanted to open up the floor to Q&A for the rest of the group to hone in on specifically any questions or answers that you guys would like to have asked. All right.
Everyone goes quiet.
Everyone goes quiet real quick, right? I got one that's up here too, actually. Give me 1 second. Let me pull this up. Okay. And we got front-loaded question 1, and we have, give me a second. Batch reporting. How does that work with your platform, and how do you automatically set a cadence when a client will receive a report?
In Zephyr currently, we have a batch module that allows to select specific reports that will be generated on a frequency. We have a calendar selector that is very comprehensive in how exactly when you want your reports to generate, and what day and what time. So there are a number of parameters that are set to generate the report, and it could be multiple reports, could be one, on any frequency that you'd like to set it to.
Got it. And then on your guys' side, from an attribution analysis, because we talked mainly about the whole portfolio level and being able to digest things from a portfolio to compare into another portfolio. What if I wanted to just research an individual fund or an individual money manager compared to a collection of funds? Would that work pretty much the same on your guys' system, or how does that work from a proposed stance, from a performance stance?
Yes. I mean, you have 2 concepts that you brought up. You have attribution analysis, and you have this comparative, more of a research component. Zephyr is extremely powerful at comparing a manager versus other managers versus peers versus benchmark. So that could be done. We also have attribution analysis that is very widely used with our portfolio performance clients, where, well, based on holdings, we are decomposing the performance of either a manager or a portfolio relative to a benchmark or a composite benchmark.
So you're able to kind of basically do the DNA analysis specifically on that individual fund then at that point and get the look through on that, correct?
Well, it's a look through in that if, let's say, our fund or our portfolio outperforms a benchmark or our policy index by 1%, we can show you how that was done.
Awesome. Got it. We are up at the 35-minute mark, so just wanted to wrap up there at that point. Again, thank you all for joining us in our first live webinar with Advisor Stack and the Zephyr team. Looking forward to holding many more with this group as this continues on. And for our contact information, please visit our website or email us directly at sales@advisorstack.com. And for all of the Zephyr information, you can visit them directly at their website or contact us directly, and we're more than happy to get you guys situated. Randy, again, can't thank you enough for taking the time out of your day to do this with us, and looking forward to the future that we all have in store.
My pleasure, Nico. We're looking forward to it as well. Thank you.
Thank you, guys. Everyone have a great rest of your day.